My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Yep, we're back in meltdown mode, no doubt about it. Dow plunging 449 points, S&P plummeting 1.23%, and NASDAQ tumbling 1.32% today. Money managers are stealing themselves, waiting for something terrible to happen, and it sure is hard to blame them, isn't it? I mean, this is a brutal environment with a lot of truly awful possibilities, and I wouldn't be surprised if tomorrow's worse than today, especially after the big run we have had. I don't blame anyone for wanting to take profits after last week's phenomenal move. But at moments of extreme doom and gloom, like I saw today, I need you to remember that the bears could perhaps be wrong. While that may sound nonsensical, let me explain why it might make sense to stay the course. See, after yesterday, the averages had retraced 50%, keep that number in mind, 50% of their post-November decline. And that is a gigantic gain. According to the legendary Larry Williams, arguably the best technician and market historian in the business, certainly the best in our show, ever since 1929, there have been 21 times where we saw a 50% retracement. 21 times. And each time the market went higher, not long after. Not lower, higher. The last time being 2020. Every single time. To me, that one weird statistic should be enough to keep you in all by itself. Very few indicators bat 1,000. I know many of you rebel at this kind of analysis. We don't really know why it works. And there are so many things going wrong. But because of this one statistic, you got to ask yourself, what can go right? Of course, on a day when a giant tech company like Adobe disappoints the street, and in the morning, and then in the evening, giant home builder KB Homes disappoints, it's a little frightening to consider some what-if scenarios, right? Sound like a Pollyanna. I think it needs to be done, though. Last week, we saw what happens when Wall Street gets too negative, right? Even as I told you repeatedly that there would be likely another leg down before this market can get its footing. I think we're kind of in that moment, but I don't think it's going to be as bad as others. But yes, some really bad things out there. So in the spirit of going against the grain, though, let's try to figure out what could go right. Yesterday, a top advisor to Putin, one of the oligarchs who elevated him in the 90s, actually quit and fled the country. You don't go into exile when you're on the winning side, do you? Now, our intelligence agencies have been pretty accurate about Putin's plans. They say this high-level official was against using tactical nukes or chemical weapons, so he left. Very bad. But given that Putin now says that he wants to attend the G20 meeting in Indonesia in the fall, I suspect weapons of mass destruction are less likely, not more. Otherwise, he wouldn't dare to leave Russia for a neutral setting where he could be assassinated. But what if at this week's NATO meeting, the so far toothless organization agrees to flood Ukraine with advanced weaponry, including planes? While we're not going to see ground troops or no-fly zone equipment, that could be another story. Putin doesn't like to lose. If you study what he did to Grozny, the capital of Chechnya, during the Chechen Wars, you can see an astounding level of ruthlessness. He told the residents he was going to level the city, and that's exactly what he did. Some people say he killed 5,000. Some people said he killed 8,000. I've seen numbers as high as 30,000. It's easy to see how he might be tempted to do the same thing to the capital of Ukraine. Make no mistake, he can't take Kyiv door to door. It's a city of 300,000 buildings, nearly 3 million people. Even raising the city with artillery might be a stretch because who knows if they have that much ammunition. Of course, Putin could, I hate to even think this, but he could kill Zelensky. He's trying very hard to do that. I think this is important. Back in the day, Russia killed the leader of the opposition, Chechnya, with a targeted missile, and that was pre-Putin, when the nice guys ran the Kremlin. But we have to ask, what if Putin simply can't win? What if he simply doesn't have the manpower to take over a country of 44 million people, or 39 million now that so many have fled? Best case, maybe settles for a limited victory, maybe taking a corridor to Crimea and calling it a day. If that happens, the war would be over, and what would be the immediate outcome? Energy prices would collapse, as would wheat, aluminum, grain, nickel. The stock market would go through the roof. How about another what if? What if the rapid rise in interest rates quickly leads to a slower economy? We just saw a 12% decline in mortgage applications year over year this very morning. That's precipitous, but it makes sense given that mortgage rates have suddenly jumped to 4.72%. That is a gigantic increase versus a few months ago. KB Home just reported that terrible number I mentioned. If to close, one of the most salient statistics, inventory was up 8%. Fed might be getting lucky here. You think housing prices can still jump 20% when rates plow higher and there's a sudden balloon of inventory because prices are out of hand? There should be a pause as potential buyers either wait for a decline or simply decide the cost is too prohibitive and stay put. I know a lot of people think house prices never come down, but they obviously weren't trying to sell their home in 2009. So what if a major chunk of the economy suddenly does slow? Remember, we're in a bad news is good news moment with the Fed. Housing cooling down is exactly what Jay Powell wants to see. Now, here's a final what if. What would happen if the pandemic really is over? I listen to Dr. Scott Lieb every morning on Squawk Box because he's been the most right of all the commentators since the beginning of this nightmare. Today, he said COVID is basically over. 2 years to the day that things got out of control. We don't have any idea what things would look like in this country, really, if the whole COVID cataclysm just ended. Now, there would be a cessation of fear that would bring millions back to work, I think. We hear from CEO after CEO that there's still plenty of people who haven't returned to the office. If we were all certain that those of us who've been vaccinated most likely won't go to the hospital, I think the holdouts would finally be willing to come back because the onus would be on them. We keep underestimating COVID's impact on our lives and the economy as a whole. So many people still won't do the things in person. And believe me, I get it. I don't want to be too anecdotal, but the attitude of Florida, where I was last week, toward gatherings is still night and day versus New York. Heck, I got my usual Wednesday test today. Nothing like a test to throw some fear in your head, right? Jay Powell might find himself in a market where unemployment rises and wage gains decelerate. Can you imagine? Obviously, that's bad news for Main Street, but Wall Street would be thrilled. Sure, there are plenty of reasons to stay out of some stocks. Hey, look, I interviewed Shantanu Narayan, the great chairman and CEO of Adobe this morning, a total mainstay tech name. And it was tough because the company was in free fall. The stock just going right down on an ever so slight miss. But Adobe has a history of trouncing estimates and growing very quickly. This time, it didn't grow quickly enough for a stock that sells at 31 times earnings. The market remains brutal to tech outfits that can't beat the numbers. Shana reminded us how strong this business is, many different divisions, but Wall Street was not appeased, talking about competition on every different level. This despite the stock already being beaten down 33% coming into today. But the bottom line, history is very clear. It says you must stay the course. The S&P 500 has already had a successful 50% retracement of its huge decline. And in the 21 times that's happened since the Great Depression, it's meant the decline is over every single time. Could this time be different? Sure. But don't ignore the very real possibility that good things can happen, too. Let's go to Juan in Michigan. Juan.
Hey, Jim.
Juan.
First time calling, and I am wondering about the stock 3MM. I bought in at 149, wondering if I should continue to buy the dip.
I don't want you to buy the dip because there are some unanswered legal questions that may make the stock so it goes back down again. It is a dividend aristocrat. It has a habit of raising its dividend, but I do think that the legal issues are going to cause people to be too worried about the stock to be taking a long-term position. Let's go to Michael in Florida. Michael.
Hello, Jim. A big booyah to sunny Fort Myers, Florida.
Nice.
My question is on Verizon. It's been going sideways for 5 years. I own it as a bond replacement. Morningstar has a fair value of 59 on it. Will 5G ever matter? It seems greatly underappreciated. Is this dead money, or will it actually pay off?
I think it's better than that. I do think it yields 5. It went down to 5, frankly, because interest rates went up so much and people are selling for that. I think business is pretty good there. I would be a buyer of the stock at 9 times earnings with a 5% yield. Let's go to Jim in Florida, please. Jim.
Hey, Mr. Cramer.
Hi.
Thanks for taking my call. Hey, I got a question for you.
Sure.
I know you touched on this company before. Used to be a darling of the market, but since so many darlings have fallen. Twilio.
Look, Twilio's got see, here's the problem, Jim. Twilio's got a great product, great product. I mean, everyone knows. But it doesn't make money. And in this world, if you're not making money, if you're not selling a product that people want, making a profit and being able to return it to some, then it is just going to be in the doghouse. And every time the stock rallies, it's going to be sold. And that's where we are until the Fed gets control of inflation. All right. History is clear on where we stand right now. I say you have to stay the course, but I understand how you feel. I know you probably think it's too hard. I'm saying don't. Keep your finger on the hold button, not the sell button. On Mad Money tonight, F45 is an all-star lineup of investors from Mark Wahlberg to David Beckham. But could the stock be an all-star for your portfolio? I'm checking in with the CEO. Then there was a lot to love from the keynote from modern-day Da Vinci Jensen Huang, and I'm breaking down what we learned from NVIDIA. And Holly came public via SPAC last year, so could this be, well, maybe one of them that bucks the SPAC? Well, the detritus of SPACdom? I'm talking to the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.